Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Hi, everybody, and welcome to the Finovate podcast. Joining me today, we have Horacio Barakat, Head of Digital Innovation for Capital Markets at Broadridge. Horacio, thank you so much for joining me today.
Thanks for having me, Greg.
So to get things started, we're going to be talking about distributed ledger technology here a little bit, but can you start with just an introduction of yourself and your background to give people some idea of where you're coming from?
Absolutely. So as you said, I run digital innovation for our Capital Markets business unit within Broadridge. And one of the most part, what I do basically is look into how do we take new technologies and apply them to basically change market infrastructure, to basically provide benefits to our clients, to the industry as a whole. And as one of the key technologies that I've been focusing on since probably 2016 has been distributed ledger technology. Also, I know, thinking about AI and others, but distributed ledger technology has been a good area of success for us. So looking at how do we change market infrastructure in general with new technology.
Yeah, no, really interesting. And obviously, it's not hard to imagine why DLT is something that has been kind of at the forefront of your thinking. Before we jump into too much detail, let's start by just setting the definition, because I think not everyone is exactly on the same page about what exactly distributed ledger technology is. How do you define that phrase, distributed ledger technology?
The best way to define distributed ledger technology is to basically break down between its core components, right? If you think about the technology in its simplest terms, it is basically number one would be the smart contract functionality, which is the ability to mutualize workflow and disagree on terms of transactions. And number two is it is tokenization, basically representing real life or assets or securities in digital form, right? So if you combine those two key functionalities, that is what you mean by distributed ledger technology. And I'll give an example as to how each component works. So if you think about smart contracts, basically the automation and mutualization of interactions between counterparties. So you're buying something, you're selling something, you're borrowing, you're lending, right? That all those type of transactions can be coded into a smart contract to automate a lot of the interaction between the counterparties. And most importantly, you're synchronizing the workflow and the activities between the counterparties. Obviously, that smart contract needs to have something to transact on, and that is where tokenization or digital representation of securities or collateral comes into place, right? It's basically taking something that is sitting in the real world and basically representing it on a distributed basis amongst the counterparties. So then the counterparties can actually transact on those digital representations or tokens by acting on smart contract. So those are the two components of distributed ledger technology, for the technology itself.
Yeah, no, really interesting. A couple of words that were just absent from your description there. One was blockchain and one was cryptocurrency. And I think this is one of those things where a lot of people in their minds kind of equate these two ideas that, DLT is necessarily cryptocurrency. How do you respond when somebody has that kind of conception about the technology?
I would say that cryptocurrencies, Bitcoin or others, Bitcoin the biggest example, are just one use case for the technology. Right. If you think about what Bitcoin is, it's basically the combination of smart contract technology, counterparties transacting between each other and actually acting on a token. That token happens to be a native token that doesn't exist in real life, that exists just on this distributed ledger environments, but it's a token nonetheless, right? So it is just one use case of the technology, but the technology can be used in many, many other ways, and it goes much deeper than that. So now, cryptocurrencies have a value that could be a good investment or not, but they're just one use case of that technology.
Yeah, no, and I think this has been something where a lot of people who have been maybe resistant to embrace distributed ledger technology have used this as kind of an excuse. Well, we don't want to be active in the crypto space. I don't think there's a future for it. And really separating those in people's minds, I think is absolutely key. So let's dive into a little bit, some of the work that you've been able to do at Broadridge. Talk to me about the digital ledger repo solution that you implemented. What were some of your key learnings? And well, first, let's start with how exactly that came to be, and then get into some of the learnings that you were able to discover.
Yeah, so the distributed ledger repo platform that Broadridge developed, it is, I would say, one of the most successful institutional scale deployment of the technology. And basically, what it does, its objective is to transform market infrastructure of the repo markets for the better. So for your audience, Greg, that may not know what a repo transaction is, basically, you got to think about it as a lending and borrowing transaction. One counterparty borrows cash, and the other, and the borrowing entity basically puts securities as collateral. So basically, in that transaction, cash goes one way and collateral goes the other way. And these transactions have the length of maybe a couple of hours, 1 day, 3 days. So at the end of the transaction, that transaction reverses itself. So cash goes the original way and collateral returns to the owner. So as you can imagine, the complexity of that transaction, it is huge. And not only the complexity, but actually the volumes of that transactions globally is gigantic. You think about 10 trillion of repo transactions outstanding every day. It can give a sense of the complexity of the market with hundreds of counterparties interacting with each other and their agents for one critical piece of the infrastructure, which is borrowing and lending money, right? So what the technology is it is a perfect fit for this market because it basically mutualizes the workflow and the activities of the counterparties via the smart contracts, which actually brings significant efficiency to the market. Reducing reconciliations, eliminating fails, making sure that the counterparties are using a common data model, common infrastructure, so making them always to be in sync. And then once you think about the digital representation of the collateral or the tokenization of the collateral, basically what you're achieving is you're providing velocity to that to those securities and that collateral, because counterparties are using the smart contracts and the automation of those smart contracts to actually move cash and collateral between themselves much more efficiently.
Yeah, well, certainly you can imagine how much easier it gets when you've got something that kind of automatically takes care of some of those transactional elements to it. And again, here's where this value really starts to show itself. Talk to me a little bit about some of the other initiatives or other spaces that you're looking at in the capital markets arena. Where else do you think DLT can really add value in that space?
Yeah, I think that the technology, as I said, it has been already deployed at institutional scale, right? It has been deployed in many use cases. DLT repo, it is just a significant one, but one of the many platforms that are distributed ledger based that are live on in the industry. And I believe that once people start seeing more of this and actually get much more comfortable with the technology that can actually significantly change market infrastructure at scale. If we think about the capital markets and how you increase velocity of the transactions, how do you reduce the settlement cycles that currently we are moving? The US is moving into a T+1 settlement cycle, right? The technology can actually significantly accelerate that and actually take it even further. Thinking about settlement cycles that are not only real-time settlement, but actually creating settlement cycles that are flexible to whatever the counterparties want or need, not just tied to, it has to be T1 or it has to be T+5 hours, right? The flexibility that the technology provide can actually provide an acceleration from that T+1 that is going to happen in 2024 to actually T real time or T flexible, right? That hopefully we can get there, just in a couple of years by leveraging technologies that distributed ledger technology.
Yeah, and I think one of the interesting things here is obviously there's some really key benefits that you're highlighting here. And I think there are probably a lot of people who are listening to this thinking to themselves, that sounds great, but I'm not prepared to get into this space, or I don't know enough to really take advantage of this. What advice do you have for individuals or companies who are trying to decide whether or not they should be looking into DLT more deeply, or maybe how they can potentially get started if it's something that they're not currently experts in, they don't necessarily have a lot of experience in?
Well, I would say that the technology is here and is here to stay, right? So the key focus areas for people thinking about the technology is finding the where, which is very important, and actually even more importantly is the how, right? Which is probably the most difficult thing to tackle. So on the where is just the technology can bring significant efficiencies to actually highly complex processes or interactions between counterparties, and actually bringing counterparties together in a synchronized way, right? So there are areas like securities lending, like equity settlement, fixed income settlement, right? There's foreign exchange. There are many areas within the financial services market that could benefit significantly as does the repo market benefiting from this technology, right? So there's many areas to focus on. The key question is how, right? And the complexity of the how is it's very difficult to introduce change in the capital markets and the financial services in general. The industry is very risk averse for the right reasons. It is highly regulated. So introducing change in a way that actually provides immediate benefits to the industry, and at the same time, it is a technology that can be easily implemented by reducing the risk of change. That is the most difficult piece. So how we did it, and my recommendation would be to start in an area that has immediate benefits, but is in a way self-contained, that you can actually implement it with lower risk. And then the compounding effects and moving into adjacencies to whatever you started, then it's going to create the big transformation that we are looking for. Like it might not feel like significant changes. It might feel marginal, within the next month, 6 months, a year. But once you look back 5 years from now, then you realize that you basically have been changing market infrastructure.
Yeah, no, one other piece that I wanted to follow up on here is I think that sometimes there's a perception that exploring this space necessarily involves a lot of risk. Can you speak to that and kind of some of the potential risks that you have to take to get involved, how big and how real those risks are versus how highly people might perceive those risks to be?
I would say the best way to reduce the risk of implementation of this technology, it is to work within the existing regulatory framework, right? So if you find ways for the technology to be implemented within the current frameworks, or operating frameworks, and actually leveraging existing market infrastructure and make it interoperable with existing market infrastructure, those are the things that significantly reduce risks and make it, even making it, de minimis. All right. Once you start thinking about, you need regulatory change, you need, you need other things to go your way to implement it. That is when the risk basically increases exponentially. That doesn't mean that over time, as the technology that is implemented within regulatory frameworks will not force or actually open the eyes of, if we can actually change the regulatory framework or update it in a way. That will happen probably in normal course of business. But starting today, working within existing frameworks, it is the best way to reduce the risk and actually make it the minimum or the same as any other technology change.
Yeah, and I think that last piece is key. Like ultimately, there's going to be risk associated with any new piece of technology, but there's no real reason to suspect that DLT is going to carry more risk than any of the other places where banks or other financial institutions are currently upgrading their tech stacks overall. So it's kind of another part of this overall digital acceleration, digital adoption piece. Last question for you. Where do you think distributed ledger technology will have the biggest impact over the next 10 years? Are there particular processes or types of companies that seem like they're really ripe for disruption, or places where you can see there's likely to be a big impact?
Yes, absolutely. And I think there's basically two key big areas, right, that I believe are going to be significantly and positively impacted by the technology. Number one, I talked about it a little bit. That is basically the settlement cycles, right? Moving very quickly and accelerating the move of the industry, not only in the US, but globally, from where we are today, T2, and where we will be in 2024, T1. I think real-time settlement as a possibility for counterparties that actually want it, need it, and can actually do it. The technology, it is a perfect fit for that. And I think it's that the technology is going to allow for that to even be, to be accelerated. Number two, I think, and this is something that I'm that I feel very passionate about. It is basically cross-border transactions across jurisdiction, particularly transactions or transactions that can happen in very different time zones, right? So let's say a counterparty in Singapore, right, needing to borrow cash or actually put collateral to work, right, in Singapore with a counterparty that sits in the US, right? So the ability to have the technology follow the sun and actually make that transaction happen between a Singaporean institution and a US bank, right, where the collateral is sitting in the US, not in use or actually cash overnight, right, creating the potential for that transaction to happen and break down the time zone barriers. I think the technology will be able to accomplish that. It won't happen today, but I think we are starting to see, even in our platform, we're starting to see how that could actually happen. And that is basically talking about velocity of capital, velocity of securities. That is what the technology is all about.
Yeah, no, really interesting stuff. And obviously quite a bit still to come. And I think you've highlighted some really interesting areas. Hopefully this conversation has also helped make the technology as a whole seem more accessible and a little bit easier to implement. I know there is still sometimes a mystique around it, but there's so much potential value that can come from distributed ledger technology. And we're really just now scratching the surface. It's one of those things where I'm sure there are a lot of creative people out there who will be able to take this technology and run with it and do really cool and amazing things. So, but we're going to end the interview there. Horacio, thank you again for taking the time to chat with us. Really interesting conversation.
Thank you very much, Greg. Thanks for having me.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.